Hello there guys, I hope you're doing well. I've got a little bit of a different video for you guys today. I want to make the case for why I think Bitcoin hits $100 million per coin this decade, okay, before 2030. A lot of people think I'm crazy. I go on Twitter and even the most hardcore of Bitcoiners think, no, Luke, you're crazy, mate. The Federal Reserve and the central bankers can kick this can down the road for another 10 years. Hyperbitcoinisation is still a long way in the distance, but I'm going to make the case for you guys why I think the inflation that we're seeing at the moment isn't transitory inflation and why I think it is the beginning of hyperinflation. Okay, if we were to illustrate my point here on a chart, we've got the German mark priced in gold, okay, back in the early 1920s where they went through hyperinflation, okay. And you can see that for the first kind of 5 or 6 years, the inflation was very, very gradual, hard to notice. Nobody really knew what was going on. Everything in the economy just went up and up and up in prices, okay? That's food, groceries, stocks, the housing market. Everything just went up and up and up, okay? Like a 5 or 10% clip. And everybody was trading stocks. They thought they were a genius. They were saying, oh, look at all this fiat money, all this fiat profit that I'm making trading stocks. This is so easy. And nobody really questioned why the price of everything just went up and up and up until 1922 came along and we went through hyperinflation. And it all happened in the space of a year. And in today's video, I want to make the case for you guys why I think that we could potentially be at this stage here in the fiat currency melting down, okay? Yeah, so before we get a little bit too carried away and I start going down all sorts of tangents and rabbit holes about money and economics and all sorts of crap, I just wanted to say I don't want to lose the beginners too quickly. This is actually part 2 of a little beginner-friendly video series I've been putting together. So go check out, this is part 1. I done a few months ago, maybe last year, that we talk about what money is, what inflation is, what hyperinflation is. We talked about why gold's been used as money for the past 4,000 to 5,000 years, okay? We talked about why our current money is broken, okay, as it's not backed by gold, okay? After that historic event in 1971 when Nixon closed the gold window on the rest of the world. And that, for the first time in human history, meant every single currency around the world is backed by nothing, okay? And the only reason we use it is because governments force it on top of us by decree, okay? That's what a fiat money is. Backed by nothing, worthless, and the central bankers and the governments around the world can monopolize the money, okay? So your British pound, absolutely worthless. Not backed by gold anymore. That is literally worthless paper that governments and central banks are printing infinite amounts of. The Australian dollar, okay? This is my local currency, the Australian peso, as I like to call it. The Reserve Bank of Australia is printing 4 billion of these every single day and funneling it to the bankrupt commercial banks like Westpac and Commonwealth and the bankrupt corporations like Qantas and Boeing. These things are worthless. You know, they're so worthless. I've never actually done this before. This is what you do to fiat, okay? You rip it up. It's worth nothing. Toilet paper. But we talk about all sorts of things in that first video, so go and check that one out. Because that's kind of an imperative to understand what money is and why Bitcoin is so important, okay? Our money right now has never been more broken in human history, okay? And we talk about how the rich exploit a broken money system by increasing the supply of money. And we've got 10,000 years of monetary history that shows us that bankers and the elite have always been able to monopolize the money. And they've always been able to increase the money supply of the money. So whether that's through clipping gold coins or whether that's by printing these worthless Australian pesos out of thin air to increase the money supply, which in turn increases the price of assets such as the stock market and the housing market. We talk about all that in that beginner video and why the rich choose to do that, because they hold a majority of their wealth in these assets that only go up and up and up in value, because they can manipulate their value up and up and up and up by increasing the money supply, okay? That's the biggest criminal offense in human history. Governments and central bankers being able to increase the money supply to stealthily steal wealth and extract wealth from the lower and the middle classes. And until now, until 2009, we've never had a solution to that, okay? That's why Bitcoin's so important. And a lot of people don't understand that. Bitcoin is the first money in human history that cannot have its supply increased. 21 million Bitcoins, you can't print anymore, okay? It's a truly decentralized money where everybody follows the same rules and there are no rulers. Okay, there's no central bankers, there's no governments increasing the money supply to extract wealth and devalue your savings. Okay, and that's a really revolutionary part about Bitcoin. It's essentially called "fuck you money." I hope that doesn't kind of take down the video. But Bitcoin's "fuck you money." Okay, you can't increase the supply of Bitcoin. You can't stop a Bitcoin transaction. You can't censor a Bitcoin transaction. You can't print any more Bitcoins and funnel it to your bankrupt cronies. So we talk about all that in the first video. Go and check it out. Stick it on 2x speed. I'm sorry for my really boring monotone kind of videos I was doing back in the day, really cringy and clickbaity stuff. I'm sorry, but it explains our current monetary system and why it is so close to blowing up. Okay, and why I think we're very close to going through hyperinflation. Okay, we talked about the CPI inflation metric printing 5% inflation figures, and why it reminds me a lot of the early stages of hyperinflation. I really do think it smells a lot like 1921. For the first time in 10 years, the Federal Reserve has got the CPI inflation metric that's highly manipulated to stay low. They've got that metric for the past 3 months in a row now, printing 5% CPI inflation prints. And I'm going to show you a bunch of stats that I've been diving into lately. That shows that the real inflation rate's actually up around 15 to 20%. And we're seeing things like used cars, they're up 100% year over year. You've got things like soybean and wheat, and those commodities are up 50 to 100% year over year. You've got copper up 50 to 100% year over year. And these clowns at the central banks are telling you, oh no, it's only 5% inflation, nothing to worry about, there's nothing to see here, guys. Like, they are literally pissing in your face and telling you it's raining. I'm sorry for the rant, I'm a little bit fired up, but I really do think everything melts down a lot quicker than everybody's expecting. Okay, we've got the big money interested in Bitcoin. Since I started making videos in 2020, we've had publicly traded companies like Michael Saylor, we've got Elon Musk with Tesla, we've got pension funds. There's pension funds allocating 5% of their total assets under management into Bitcoin. 170-year-old pension funds like MassMutual, some of the most conservative investors of all time, are now talking about Bitcoin and articulating it and describing it for what it actually is, a superior store of value. That's something that you don't sell for 50 to 100 years. Okay, we've never been through a Bitcoin bull run where the narrative has been correct. Okay, where we've had the big money interested in Bitcoin and they understand the value proposition of Bitcoin. Like we've got nation states like El Salvador making Bitcoin legal tender, and after that announcement, we had 5 or 10 other countries in Latin America. We had politicians from Paraguay, Brazil, Mexico, Panama, all adopting their famous Bitcoin laser eyes, indicating that they were interested in following suit in El Salvador. I just think we have the perfect storm for Bitcoin to go through somewhat of a super cycle, or for it to reach escape velocity. I love that term, where everybody at the moment is expecting all these fancy models like stock to flow to go on for another 5 or 10 years. Everybody's expecting Bitcoin to go for a traditional 3-year bull run where it runs to 500k this year and it has a nice big pullback to 100k, and then it goes through another 4-year halving cycle after the 2024 halving. I just think it happens a lot sooner, and I think a lot of it has to do with the macroeconomic situation at the moment. The Federal Reserve right now is printing $120 billion monthly and funneling that straight into the banking system. We're seeing the reverse repo markets absolutely explode. Okay, the reverse repo market, the repo market exploded in September of 2019, just before we had the health outbreak, and the Federal Reserve came in and printed trillions and trillions and trillions of dollars to keep the financial system propped up. And right now, the reverse repo market is going bananas again. Okay, the Fed's clawing $1 trillion off the market every day just to kind of keep everything functioning. That's a little bit of a rant and a little bit of an intro, but that's what we're going to talk about in today's video. So let's get on straight into it. Okay, guys, I'm back here. I had to take a little bit of a break. I was getting a little bit fired up and enraged talking about inflation and how these criminals lie. They piss in your face and tell you it's raining, and they justify their monetary printing because it helps line their pockets with our money. Okay, so we're going to be diving into a few more stats about inflation and how these criminals steal from us for inflation and how they manipulate the CPI inflation metric. So we had a look at earlier all of these natural commodities up between 50 and 70% year over year. Meanwhile, the CPI is telling you that we've got 5% inflation. Used cars up 100% year over year. And now we've got container freight rates. Okay, so a lot of our goods and services come out of China. It's been previously very cheap manufacturing over there, and now you've even got shipping container rates up 500% for the USA and Asia routes. Okay, when you have a look at the shipping container rates, they're absolutely skyrocketing. Have a look at that. Okay, year over year, the 5-year average is around $2,000 for a 40-foot container, and over the past 6 months, you're now paying somewhere between $10,000 and $12,000 for the same container that used to cost you $2,000. I'm telling you, transitory inflation or hyperinflation. I'll tell you what it is. It's hyperinflation. Now, what else we're going to have a look at is the shadow states index, and we're going to have a look at how the government has changed the way they measure inflation on multiple different occasions. Okay, you can see here that back in the early 1980s and 1990s, that was the most recent time that they changed how they measure the inflation metric. Okay, so what they actually did was they took out all of the things that we pay for on an everyday basis, like food, energy, housing, and they changed the way they measured that all back in the 1980s and the 1990s. And you can see what happened with the government official CPI metric, which is the red. You can see that it's hanged around 0 and 1 and 2% for the past 2 to 3 decades. And you can see right here at the end, now it's only starting to spike and hitting 5%. That's showing our most recent 3 months of CPI inflation hitting 5%. But you can see, meanwhile, the whole time that the government official CPI inflation metric was printing 1 and 2% inflation rates, justifying the central banks to expand the monetary base by 10 and 15% year over year. The actual inflation rate, which is the blue, and you can see up top here, it's 1980 based. So this is how the government used to measure inflation themselves, and all that Shadow Stats does is track that exact same basket of goods and services. And you can see from the 1990s, inflation's been around 10% all the way through, and most recently, after the pandemic controlled demolition of the economy due to a quote-unquote health crisis, inflation's picked up even more, and it's now approaching 10 to 15% in the United States. Okay, we know that inflation in other countries is actually a lot higher than the United States. I'll do a video on the dollar milkshake theory in a later video. This one's already getting a little bit long, so I'll try and cut it short. But if the United States is printing 15% inflation, my God, what's the rest of the world printing? Okay, we're going to also have a look at how Arthur Burns, a Federal Reserve chair back in the 1970s, also manipulated how they measured the CPI inflation metric. Okay, so in the 1970s, when the USA depegged itself from the gold standard in 1971 and was going through significant inflation in the 1970s, where the government official model was hitting 10%. Okay, 10% CPI inflation. Arthur Burns was frantically changing how they measure inflation. Okay, so he tried all sorts of little tricks. They changed it from, instead of being the cost of goods, they changed it to the cost of living. Okay, so if a porterhouse steak went from $10 to $20 year over year, that's 100% inflation. But what our good friend Arthur Burns would do is he would simply just change and the way they calculate it. They say, oh, well, steak's now $20 a kilo, but your cheap soy burger or your beef burger is still $10 a kilo. So year over year, your cost of living is still $10. So 0% inflation here. And you can also see lots of other examples how they changed the way they calculated rent. Okay, so the actual, I'll put up a chart of how the cost of actual renting is going up and up and up at 10 to 15% a year, but the way that the government measures rent, it's only going up at like 1 to 2% a year. Another way they do the scam. Another way that they change the CPI inflation metric, they would say that, oh, because there was a storm near that banana field, we're just going to take out all food out of the CPI inflation metric. And change how we calculate it. Okay, so you can see in the 70s on multiple occasions they changed it. And this article here, by the time Burns was done taking things out of the inflation basket, only 35% of the CPI was left. Okay, and it was rising at a double-digit rate. So even with the manipulated basket, it was still rising at a double-digit inflation rate after the US essentially implicitly defaulted on its debt. And this chart here really does a really good job at highlighting the kind of things that they leave in the inflation basket. Okay, so all your things in red is getting more and more expensive. These are things that the United States can't export. Okay, so your hospital services, you can't export that to China for that to manufacture. College tuition, college textbooks, medical service, food and housing. You can see that all of this stuff has been rising at an average of 55%, that's highlighted in blue there, over the past 20 years. This has been rising at 50%, and they deliberately take all of this stuff out of the CPI inflation metric, and they stuff the CPI inflation metric full of these deflationary technology things like cell phone services, computer software, toys, TVs, Netflix subscriptions. See all the stuff in blue? That's down 50 to 60% year over year because of the deflationary forces of technology, and how technology is making everything cheaper and cheaper. The government deliberately stuffs the CPI inflation basket full of this stuff and says, oh no inflation here. We can continue to print. And obviously, the more you increase the money supply and the more you push up the price of assets such as stock market and the housing market, you're essentially pumping your own bags, okay? Because the wealthy, the 1%, keep all of their money in these assets. And we can see what happened since 2020. They call it a pandemic, but I call it a plandemic. You can see that since the start of the plandemic, the workers, okay, so this is the lower and the middle class of the economy, they've lost $3.7 trillion in earnings. Meanwhile, the world's billionaires got $3.9 trillion richer, okay? In my tweet, I've said here, the quintillionaires know it's over. Is this the greatest exit scam of all time? The World Economic Forum is calling for a great reset in 2020. The International Monetary Fund is now talking about a Bretton Woods 2.0. We're going to be going into all of this stuff and what our elites in control of the central banks and the governments are talking about in this. We might have to make this a part 3 because, boy, oh boy, this is turning into a little bit of a rant. I just wanted to quickly show you. We had a look at all the container rates. We had a look at the manipulated inflation. We also had a look at how they changed the CPI inflation basket in the 1970s. And in the third part of this video, where we look at the scamdemic and how these elites know the system's about to crash, we're going to be looking into their actions and the kind of rhetoric that they're using, because I think it's very important to pay attention. Joe Biden the other day, I'm going to play this video. He was saying, Joe Biden was saying that him printing trillions and trillions and trillions of more money was actually going to reduce inflation. And just look at how he really emphasizes this.
Economy, couldn't that add to...
No, look, here's the deal. Moody's today, when a Wall Street firm, not some liberal think tank, said if we pass the other two things I'm trying to get done, we will in fact reduce inflation. Reduce inflation. Reduce inflation. Because they're going to be providing...
Yeah, no, you heard that one correctly, ladies and gentlemen. Biden says that printing trillions more dollars is going to reduce inflation. Okay, he's had to repeat himself 3 times. It's a little bit of psychological programming. They don't want you to know that the system's about to collapse while they're absolutely scampering to get onto the Bitcoin lifeboats. That's our job, ladies and gentlemen. We've got to show this kind of information to the normies who don't understand what's going on, because I can tell you, I think the Titanic's hit the iceberg. The music's playing and everybody's still dancing on the decks. Meanwhile, the Bitcoiners on the lifeboats screaming, "Get off that boat! Get into the Bitcoin lifeboats!" It really is our job to get these poor normies onto the lifeboats, because shit is melting down. So stay tuned to part 3. We'll have a look at a little bit more Bitcoin specific information, and have a look at some of the indicators and narratives that point towards maybe this cycle potentially being unlike any cycle we've seen before. So stay tuned for that one. Have a good one, guys, and I'll see you in the next video.